The S&P 500 has lost more than 200 points within one day, and it has breached the 6,700 range, then the 6,600 range, and finally settled in the 6,500 range. And the primary reason for this fall was the comment from the president, wherein he has said that he is going to impose more tariffs on China. But even before his comments, what we knew is that the market was already overweight or overbought. And in my previous S&P 500 weekly technical analysis, I've repeatedly mentioned that S&P 500 has hit the saturation. Any more bullish addition will make it unstable, will add more weight to the S&P 500. And other than this, there was one more trap. This trap was something that we have seen earlier also. On 6th of October, Monday, there was a green candle, then Tuesday, red candle, then Wednesday, green candle, then Thursday, a red candle. So green, red pattern. And this was a trap because most of the people, they were thinking that on Friday, there will be a green candle. However, on Friday, S&P 500 was already trading under pressure. So it was not supposed to give a green candle. Even without these the comments from the president, it was most likely to give a red candle. That is why one day before, on Thursday, on October 9th, in this the first update, I mentioned that the S&P 500 is forming a pattern of green red candles. However, my Patreon community members were advised to not to fall for this pattern because it is not backed by technicals or levels or anything like that. And other than that, the S&P 500 has started to show its heaviness from Monday onwards because on Monday it gave the green candle. And in my previous S&P 500 weekly technical analysis, I mentioned that if on Monday, if on 6th of October, the S&P 500 gives a green candle or try to trade green, then it will add more saturation and it will hit the overbought, and these are the conditions. And then on Tuesday, S&P 500 gave a red candle, but the most important part of this candle was the low. The low was 6699.96. So for the very first time, the S&P 500 after many days breached the 6,700 mark just by 4 cents. Just by 4 cents. And this 4 cents has brought the bearishness and the fear in the market. And this was very well explained in the midweek update posted on October 8th to my Patreon community members. There is a fear by 4 cents. This was the reason why you were seeing a struggle in the bull side. So if there would not have been this heavy fall, then there was supposed to be a limited fall. But again, in the normal scenario, without the comment from the president, S&P 500 was supposed to hold above 6,700 on Friday. And then on Monday, on October 13th, the profit booking was supposed to happen to bring it down back to the 6,600 range. This is why if you see that in my daily updates to my Patreon community members, I mentioned that the bullish side, okay, is limited, bearish side is open, but to the 6,700 range, depending on the conditions at around 672x, the heavy support, okay. So every day it was struggling. That is why every day I was kept on mentioning this thing that the entire market is now heavy. The bullish side is heavy. Then almost the same thing was there on October 7th. Okay, it was clear that market S&P 500 is range bound. It is trading within the range. No matter what, bullish side was limited, bearish side was wide open. So again and again, repeatedly, I mentioned through this update to my Patreon community members that what was happening in the market and why it was restricted in the bull side and why it was very much open in the bearish side. So as of now, we are expecting a little more fall before the S&P 500, Dow Jones, Nasdaq, or the entire US stock market may correct itself. We are expecting a little more fall through a gap up open or an initial or intraday bullish movement. Initial or intraday bearish movement on Monday. So all of this, like to what level it will be coming down, whether it will lose the 6,500 or not, where it will find the stability, and what will be now the bullish conditions. All of these I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of October 13th, means from October 13th, which is Monday, to October 17th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part, I will discuss the technicals, the chart, the weekly chart and the daily chart, the technical indicators, okay, that how much change is there through the technical indicators on the weekly chart, daily chart, and also on the lower level charts that are demanding a bullish retrace. Okay, then in the second part, I will give you the probable movement of the S&P 500, means what is going to happen, just like last week, that any more green movement, any more bullish movement, okay, will add more weight, okay, will make it more heavy, okay, and then bearish side will be limited to 6,700 psychological mark. Losing 6,700 means more fall or heavy fall. Similarly, I will discuss all of these, the bullish bearish conditions in the probable movement in the second part. So now let's first discuss the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So now if you notice, this is the last weekly candle of the S&P 500. The closing is almost equal to the low of the candle, and there is partial engulfing, not absolute engulfing. This is indicating a gap down open on Monday, or irrespective of any open, an initial or intraday bearish movement on Monday. Okay, this makes more sense because the S&P 500 has recently breached the previous low, that was 656922, 6569.22, and in the previous S&P 500 weekly technical analysis, I mentioned that if this mark is breached, then we will expect more bearish sentiments. Okay, and now that the S&P 500 is very close to the moving average, so this means that there is some more room in the bearish side through the candle itself. Okay, now let's analyze the last weekly candle of the Dow Jones. Well, there is no partial or no nothing, okay, engulfing, but the last weekly candle of the Dow Jones is very heavily bearish, closed below the previous lows, okay, indicating an initial or intraday bearish movement on Monday or a gap down open on Monday. Okay, and now that there is a news that there will be 100% tariff on China, so it further supports the gap down, okay, or an initial or intraday bearish movement on Monday. Okay, so overall through the candles, the weekly candles, the bearishness is seen, the bearishness is there. However, if you notice, these candles are not as heavy, okay, as what we have seen back in April, because now whatever was seen in April, that is expected to be seen again. Okay, back in April, the S&P 500, when it was trading, then it started to come down, then it lost, S&P 500 lost almost 21%, okay, from its peak. Then that time the peak was 6147, okay, and that time we have seen these heavy candles like this heavy candle, but this was the most heavy candle, the week of 31st of March 2025, very heavy bearish candle. This was back in April. Okay, and if the situation does not improve, then definitely we are going to see another chapter of the same kind of movement. Okay, so that will be there. So now this means that this candle on the weekly chart is not heavy as compared to what was seen earlier. Okay, now in terms of the technicals, what we can clearly see here is that the S&P 500 is still trading bullish on the weekly chart through the moving averages, Ichimoku cloud and the Bollinger Bands. Okay, however, if you notice here, the S&P 500 is trading bullish through the MACD on the weekly chart, but is bearish through the stochastic RSI on the weekly chart, and this is the problem. So now earlier S&P 500 was getting support because MACD was bullish, stochastic RSI was bullish on the weekly chart. It was getting bullish support to hold and sustain, even though it was saturated and it was overbought. But now that support is gone. Okay, these moving averages, etc., this will give limited bullish support. So only the numbers will help the S&P 500 to sustain, otherwise nothing. So in this manner, the S&P 500 will be seen or will be considered as 75% bullish, 75 to 80% bullish on the weekly chart. You can say like 80% bullish on the weekly chart, S&P 500. Dow Jones is almost the same on the weekly chart, because Dow Jones is also exactly in the same condition. Okay, exactly in the same condition, bullish through the Ichimoku cloud, Bollinger Bands and moving averages on the weekly chart, also bullish through the MACD on the weekly chart, but is bearish through the stochastic RSI. So Dow Jones is also in the same condition. The only problem is that the Dow Jones is also heavy as of now. So if there comes one more red candle, weekly candle in the next week, then that will help the Dow Jones to come out of the saturation. Okay, the same is there in the S&P 500. So in this manner, the Dow Jones is also 80% bullish on the weekly chart. Now let's see if the S&P 500 is holding on the daily chart or not, because this is the daily chart. So on the weekly chart, we have seen that the S&P 500, Dow Jones, both are still 80% bullish. Okay, on the daily chart, well, picture is not good. Okay, but guys, before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So on the daily chart, the S&P 500 is now bearish through the Bollinger Bands and bearish through the MACD, bearish through the moving averages on the daily chart, but is still bullish through the Ichimoku cloud on the daily chart. Okay, so it is very much bearish now. The S&P 500 is bearish through the MACD as well as the stochastic RSI on the daily chart. So overall, the S&P 500 is bearish through all of the technical indicators, but the Ichimoku cloud. So, and also it is now out of saturation. Okay, so in this manner, the S&P 500 on the daily chart will be seen or considered as 80%, sorry, not 80%, but actually it will be 70% bearish, because there is still no confirmed crossover in the moving averages. So S&P 500 is now 70% bearish on the daily chart, whereas it was 80% bullish on the weekly chart. Dow Jones is almost the same, because Dow Jones is also bearish through the moving averages and through the Bollinger Bands on the daily chart, but is still bullish through the Ichimoku cloud. And the same, the MACD is bearish, stochastic RSI is bearish on the daily. Okay, so in this manner, the Dow Jones is also out of saturation and all of these are conditions, but the Dow Jones is also 70% bearish. Okay, now we are seeing this the counter movement on weekly chart. Okay, both of the indices are bullish. On daily chart, both of the indices are bearish. Okay, this means that in the long term still there is some scope for the bullishness, but as of now in the short term, okay, there will be bearishness. Now when I say the bearishness, this does not mean that there will be heavy fall. See, let me show you that not here in the S&P 500, but if I show you in the Dow Jones, and if you notice the daily chart of the Dow Jones and the MACD of the Dow Jones, okay, so there is very heavy divergence in the MACD of the Dow Jones. Now what the concept says, that heavy divergence is not allowed. What does this mean? This means that if the Dow Jones gives like one or two more red candles, okay, or just one red candle, okay, then this divergence will increase further, and then the Dow Jones will become unstable in the bearish side, and then there will be a demand for a sudden and heavy reversal or heavy retrace in the bull side. Okay, in order to fill this, in order to bring it back into this kind of condition. Yes, one more thing, let me show you here, that the Dow Jones and S&P 500 was struggling. That struggle can be clearly seen through the MACD. Okay, so what happens is that, see, if you have subscribed to my YouTube channel for last many days, weeks, months, years, then I've shown you that generally the MACD is very linear. Either it will be bearish sorry, either it will be bullish or it will be bearish. Okay, but whenever we see like it is coming down, then moved up, then came down, then moved up, then came down, this is what we call as the struggle. Okay, if this happens in the bull side, this means market is heavily unstable in the bull side, and soon it is expected to give up all of these gains. Okay, that were seen, okay, from this moment onwards when it was like this. Okay, and if you notice, almost the same pattern, okay, you can see here in the S&P 500, came down, moved up, then sustained, then came down. Okay, so this kind of struggle. So S&P 500 was earlier struggling. If you notice that mostly the movement is linear, most of the times for many days the movement is linear movement. Okay, but when there comes, you know, sudden, like within 2, 3 or 4 days, okay, within a week, 1 or 2 times there comes, you know, this the crossover in the MACD, so that shows struggle. Okay, and struggle is not good. Struggle clearly indicates that market is clearly not performing well, or is struggling, or is heavily susceptible, okay, to give a counter movement. If this struggles happen in the bearish side, then very heavy bullish movement. If this struggle happens in the bull side, then very heavy bearish movement. Okay, so it will be seen in this manner. So now that the MACD of the Dow Jones, okay, is showing very heavy divergence, so one daily candle or two daily candles are maximum allowed. Okay, not more than that, and then eventually technically it will be forced, it will be compelled to give a good counter bullish movement, wherein within one day we will see more than 1% movement or 1 to 2% movement within one day. That will be the counter reaction through the technicals. But guys, whatever is going to happen or whatever will happen, I will keep you updated, I will keep you posted, I will keep you informed through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. The pre-market analysis before the open of the stock market, the first update, the second update, the midday update after 3 hours, then the final update before the closing of the stock market. So in this manner, my Patreon community members are very well aware of what is happening intraday, what will happen the next day, etc., etc. And it's not just about these daily precise updates which I give to my Patreon community members for the Dow Jones, Nasdaq or S&P 500 every day from Monday through Friday. But I also give the opportunities in the premium stocks, 50 to 80 monthly opportunities in the premium stocks and the ETFs of the US stock market. So recently I gave Nvidia almost hit this mark, and then Nvidia came down heavily. Similarly, I gave the one opportunity for QQQ. Again, QQQ hit and a very heavy fall. Okay, these are the premium opportunities, and sometimes I also include the options. Like recently in the QQQ, I included the option opportunity. And that's not all, because I also gave the midweek update to my Patreon community members, and it is a video technical analysis that I give to my Patreon community members every Wednesday or Thursday, and I discuss all of the levels, numbers, mark, the failure, okay, for the bull side, bearish side, including, okay, all of these the conditions. So the 4 cents theory I have discussed in this the midweek update. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will find, or you will see this tab or this button which says membership options. And when you click on this button that says membership options, then you will see that there are these 3 levels, 3 tiers. This is level 1, and this is level 2, tier 2, and this is level 3 or tier 3. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, pre-market analysis, first update, second update, midday update, final update, as well as the opportunities in the premium stocks and the ETFs, and the midweek update video technical analysis. So guys, whenever you want to join my Patreon community, in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the second point of the agenda. And here I will give you the probable movement of the S&P 500 and in a manner to the entire US stock market. for the next week, means from October 13th, which is Monday, to October 17th, that will be Friday. So whatever is going to happen or is expected to happen in the next week from Monday through Friday, I'm going to discuss here. So first of all, you need to understand that there's the government shutdown. Okay, because of the government shutdown, the economic data is not coming out. Okay, so while earlier it was non-farm payroll data and the unemployment data that is yet to be released, and now in the next week on Thursday, the PPI data, core PPI data, okay, and the retail sales data, that will be there. But if the government shutdown does not end, then this data will also not be released. Okay. In the absence of this data, whatever the speculation, whatever the fear or greed there is there in the market will trade accordingly through the numbers, etc. Now, there is only one thing that is in the favor of the stock market or in the favor of the Wall Street. That thing is the earning season. Now, in the next week, okay, the week of October 13th, the banks are going to post the earnings as early as on Tuesday morning before the open of the stock market. The JP Morgan, Goldman Sachs, okay, the banks are going to release the earnings, and then Tuesday, Wednesday, Thursday, until the end of the week, all of the banks will post the earnings. Okay, this will be an early indication, and we'll get to know whether the economy is still holding or not through the earnings of the banks, because this is not dependent on the government shutdown. Okay, so it is independent, and other than that, I think on Tuesday or on Wednesday, there will be the speech of the Federal Reserve Chairman. Okay, so either on Tuesday or Wednesday, the speech of the Federal Reserve Chairman. However, now the speech of the Federal Reserve Chairman won't make much impact, bullish or bearish impact on the stock market, on the Wall Street, because now the Wall Street or the stock market is primarily looking into the comments of the president. Okay, and recently he has said that he is imposing 100% tariffs, okay, on China. So this is again going to create the similar situation that was there, okay, back in April. But that time in April, okay, it was also, it also included the other countries in the European Union, Canada, Mexico, etc. Okay, but this time China. So we will see on Monday. It will be very much clear that how much impact will be there on the market on Monday itself. Okay, we need not to wait for Tuesday, Wednesday. Monday itself, it will be very much clear. So this means that now, if the market trades red, if market loses more, okay, then Tuesday onwards, the earnings will be released, and then these earnings can help the market to recover. Okay, now before I proceed further, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire USA stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. One more thing, that the S&P 500 has now disrespected a very heavy range that was 664x, 666x. Okay, these are the two heavy levels, and there is a range in between these two. Okay, this very narrow range is there. Okay, a good range is there. S&P 500 has disrespected that range. This means that whenever it corrects itself, okay, whether in the next week or next to next week, then it will be moving back to the range. Okay, so it will be like conditional, like from where it is going to reverse, from 6,500 range or 6,400 range. Okay, but as of now, any bullish movement, any bullish reversal will be limited to this range itself. That's it. This is what we know. Okay, now if the S&P 500 recovers this range, it is not a zone. No, it is not a zone. It is just a range. Okay, primarily it is 666x. This is the primary. Okay, this is the heavy. Only when the 6,600, okay, the level is recovered, and the closings are seen above this level, then only the 6,700 will open. Okay, and S&P 500 will be in a condition to recover the 6,700 and to trade in the 6,700 comfortably. Okay, although initially it will struggle at 6,700, but once it enters into the 6,700, gives closings in the 6,700, then it will go bullish, then it will be in a condition to trade bullish irrespective of anything. This means that initially the 6,606x, or this is a small range, okay, bullish movement will be limited and will be restricted to this. However, because of the conditions that were present on Friday, okay, when it was also the weekly expiry on Friday, so because of these conditions, S&P 500 and Dow Jones are in a kind of situation wherein we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Now when I say this is a gap down open or initial or intraday bearish movement, then this brings the 6,500 psychological mark into the picture. So as of now, the S&P 500 has reasons to sustain at or above 6,500. Okay, while at the same time the Dow Jones will also sustain, because both of the indices, S&P 500 as well as Dow Jones, are now in the overstretched condition. And so this overstretched does not mean oversold. No, it is just overstretched. Okay, because the lower level technicals are now trading at the saturation in the bearish side and are indicating a bullish reversal in the market. Now how this bullish reversal can work in this case? Well, historically we have seen that if there comes a good gap down open like 0.5%, 1% or 0.6%, 0.7%, a good gap down open, okay, then immediately after open the market will try to come down. It will show that it is trading in the open equal to high condition, it will try to come down. Okay, but because it will be already in the overstretched condition, so it will have to recover back, it will have to move up. Okay, similarly here also it will have to recover back, it will have to move up. Okay, and when it comes into that condition and forms special bullish patterns on the lower level charts as well as on the daily charts also, then we will see a recovery. Okay, but as of now the problem is that the S&P 500 has not just breached the low of this candle, but has also breached the low of this candle. This is 6551, and yesterday on Friday S&P 500 made a low at 6550. It has also breached the previous candle. Earlier S&P 500 was trying to avoid coming into this condition, because whenever this happens, this kind of situation that is currently there, this indicates the change of trend. It may happen instantly or may take some time. So when I say it may happen instantly, this does not mean that there will be absolute trend change. This means that there will be like fall for 2-3 days, there will be fall, then it will correct itself. Okay, by that time there will be confirmed crossover in the moving averages, technicals will change from bullish to bearish, there will be limited bullish reversal, and then there will be fall. Or if it doesn't give up now, it try to move up, then now any more bullish movement or whatever bullish movement will happen, even if it recovers the 6,700, then also this, because of the change of the trend, okay, this means that now sooner or later, not later but sooner, it will be back into the bearish trend, because this indicates the change of trend. Okay, so if there comes one more closing below both of these, the two levels, means below 6551, okay, just one more daily closing, then that will also suffice this requirement of change of trend. Okay, it may happen instantly, like for next 2-3 days we will see continuous fall, heavy fall. Okay, or it can reverse and then will take 1 to 2 weeks before it re-enters properly into the bearish side. But now change of trend, okay, it is clearly seen through the technicals. Now question is that, sorry, not the question, but the thing is, everything will remain okay. Okay, not good, but everything will remain okay. as long as S&P 500 is coming down but is not breaching the 6,500 psychological mark. Why? Because it has lost the 6,700, it has lost the 6,600 within a day, it has entered into the 6,500, halfway through it is already there. Okay, because when it breaches the 6,500, then it will trigger more bearish sentiments in a manner that the traders will think that now it is heading to the 6,400 psychological mark. Okay, although there are very heavy support levels in the 6,500 itself, or in between the 6,400 and 6,500, there are very heavy support levels. But because the market was already very much heavy, okay, it is now losing weight. So that is why it can even lose the 6,500, but it will still show reluctance. It will show reluctance or hesitation to lose the or to breach the 6,500, because what we have seen is that on 7th of October, on Tuesday, when the S&P 500 lost the 6,700 just by 4 cents, and I've explained this the theory, okay, in detail in the midweek update, that now the bearishness will be there. Okay, so any confusion or anything will bring it down. Okay, so just the 4 cents. So this was very much clear on Tuesday, on 7th of October itself. So this means that now, because of this heavy, okay, this thing, people are going to sell. People are in a mood to sell. Okay, some people will still see an opportunity to buy. Okay, but buy only, the buying condition will only work if it does not breach the 6,500 psychological mark. Once it breaches the 6,500 psychological mark, then it will enter deep within the 6,400. Okay, now 6,400, I think yesterday on Friday, one of my Patreon community members have asked me this question. Okay, it was related to the news, okay, and then the impact long term, short term. So I mentioned it is actually the 6,400 range where we can say that the market has technical and non-technical support, okay, to hold in the 6,400 range when it comes down in the 6,400 range, because 6,400 range brings it or help the S&P 500 to come out of the all kind of saturation or the overbought or the overbid conditions. Okay, so when it comes down to the 6,400, then this is where it is going to find good support. Okay, and then we will see it can even get a limited reversal. Okay, and then after some time, okay, it will follow the bearish path. As of now, heavy fall, very heavy fall. So for this we need to wait for Monday. On Monday it will be very much clear how much fall will be there, whether there will be a reversal or not. If there will be a reversal, then how soon we will see the reversal, whether intraday Monday there will be a reversal or not. Because if there comes a gap down open, good gap down open, after open it gives up, comes down, okay, and within 1 to 2 hours, first 1 to 2 hours, if it gets a reversal and if it comes into the bullish condition, then in that case the market will be in a condition to sustain and to move up, because in that case it will work as an opportunity to go bullish. That will be the only case, otherwise not, because otherwise it will work as it will be a trap, and then it will come down, and it kept on coming down. Okay, that condition will be there. Here exactly the same condition is there in the Dow Jones, okay, that we are seeing in the S&P 500. But Dow Jones, this condition is like in case of the Dow Jones, the Ichimoku cloud is now very much near, because Dow Jones has breached all of the moving averages. Ichimoku cloud is now very near. If the Dow Jones tests the Ichimoku cloud, fine, enters into the Ichimoku cloud, okay, will be another sign of bearishness, weakness. Closes inside the Ichimoku cloud, another sign of weakness, bearishness. However, it will not confirm that there will be a fall, because when it comes into the Ichimoku cloud, then the situation becomes dicey. Dicey means that now we do not know, it cannot be confirmed whether it will come out, okay, whether it will come out in this the bearish side or will come out in the bull side. Generally what happens is that, okay, under normal circumstances or when the situation is not bad, it will enter into the Chimoku cloud. Okay, will trade in the Chimoku cloud. Then rather than coming out this side, it will get a bullish reversal, but the bullish reversal will be there in the Chimoku cloud, and then the second time it will give up. So in this case, in this manner, it will form a staircase pattern. This staircase pattern, okay, is a perfect bearish movement, perfect absolute bearish movement. Okay, if it directly comes out, then it will have to reverse back to this and then only this one. Okay, so on Monday itself, again through the Dow Jones, we will come to know whether there will be more fall, continuous fall or not. Okay, through the S&P 500, we know 6,500 is the mark. 6,500 is the psychological mark, and the 650x is my heavy support level. Okay, and whether it will breach the 6,500 or not, it will be clear through the 650x, because if it sustains at the 650x, then it will not hit or not breach the 6,500. Rather, there will be a reversal, intraday reversal, a good reversal will be there. Okay, so that will be there in that case. But guys, whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then you can ask your questions through the comment section.